Huge news from the automakers today. The Detroit Big Three posting some big sales numbers from the month of February. We showed you the numbers about 20 minutes ago. Let's take it a step further now. Bring in Mike Wall. He's an auto analyst joining us now. Let's talk about, we got a whole bunch of stuff to talk about here. The Detroit Big Three did well. GM led the way, 45.8% of a sales jump last month, but they did it through incentives.
There was increased incentive activity. There's no question about that. But we've seen, and when we saw with General Motors, we saw it both on the small car front and the full-size pickup front and the trucks and SUVs. So it was a pretty good blend, but there was some fueling of incentives going on.
They got aggressive with some of their leasing programs as well. Did that pay off? Is this kind of a return to the new normal?
You know, it really did. It paid off last month. There's no question. And I think we haven't seen them go back to the bad old days, is what I'd kind of coin it. We haven't gone back quite that far. We're going to be watching them over the next couple months to make sure they don't, or hopefully watch for that. They are definitely ratcheting it up, though.
Ford was up almost 14%, Chrysler up 13%, but their popular ad from the Super Bowl for the 200, that car is off to a slow start.
It is. That car is going to have a tough time. You're coming off of the old Sebring, and still there's some of that reverberation of the old Sebring. It's an incredibly difficult market in that mid-size car segment. So, but overall, you know, Chrysler is making some progress with some of their other product.
Toyota, they continue to battle some issues in the PR front. They had another recall that was issued, but their sales up 41.8%. And just like GM here, compact, midsize, hybrid, minivan, even the large pickup models, all showing improvement.
Almost across the board. They came off of a pretty easy comparable versus last year, but at the same time, they did have some very nice sales performance. They are also increasing some incentives noticeably as well, so we're watching them.
Mike, trucks were driving a lot of the sales here for last month. This was before a lot of the gas price stuff became an issue, and now we've got prices. We could be looking at $4, maybe $5 this summer. What happens then?
It is. We're going to be watching that. I think what you're going to see in the beginning, you're going to see consumers, I think, retrench a little bit on some of their secondary purchases, maybe stay home, not travel as much. It isn't impacting vehicle sales yet, but we do expect it to start impacting the mix, what you're talking about with the mix. We've got some fleet buyers that are coming back into the pickup truck segment. They have to replace their fleet. But those other buyers are moving more downsize, downstream, and downscale, and that's where you're seeing some of the smaller cars that are really starting to perform in the market.
Right across the board, though. Trucks, though, continue to be...
we still are a truck market. We're still a truck market, so we have to watch that. With the agriculture and some of the contractors and skilled trades, there's still a market for it, but it will be impacted by some of these gas price spikes.
Always great to check in with you, Mike Wall. Great. Thanks for your time tonight.
You bet.